3, 2, 1.
Blast off.
Boom.
Alrighty.
We're here.
We are here.
TSP update show.
7 November 2021.
Wow.
Time is flying, bro.
Man, this whole year's flown by. I don't know about for everybody else. Hopefully it's been a good year, but I don't know what this year's been, but it's been a blur for us. We've been going like crazy. Hopefully everybody has seen that we released the app. It's primarily for members. Yep. There's not a lot of use to it if you're not a member. I mean, there's some. We put our live streams on there and stuff but if you log in, a lot of good use, right?
You can get the same features if you're not a member that you would get in the group, right, or the website.
You can see the show.
Yep.
It's right there. So every week you just pull it open and watch the show. You can watch our live streams in there, and there's one other thing. I can't remember what it is. Yeah. But now for members, and everybody asked us to keep it really simple, just not have lots of, have to dig to find things. So we took your word for it and made it simple. Alerts are there, the allocations alerts, the weekly analysis, all the things that you would normally go to the website and have to click around to find. It's just pop, pop, pop. And when you get an alert now, alert comes up, you go and hit it, see the alert, if you guys go in the alert section, there's a tsp.gov link. It goes straight to the login. Literally, you could make your allocation changes in probably less than a minute.
Yeah, on the phone. And you're going to get a notice, right? It's going to pop up on your phone saying the alert posted.
Exactly.
So
we can't get
any better.
It can't get much simpler. A lot of people have been asking for this, why we did it. Before you still get the email alert and you get a text notification. But, there's in the government, we got people that are working in lots of different situations. So they don't always have access. They're not sitting in front of their computer. Right. Hopefully, if you're not in front of your computer, you got your phone. Hopefully, if you're a place like a skiff where you don't have your phone, you're in front of a computer. We can't do much more.
Right. We don't have carrier pigeons.
Yeah, we can't send Amazon out to deliver the message and knock on the door. The other thing is, if you'll notice during this show is we're pretty much not going to have the charts for the weekly charts, right?
Right.
And the reason is
we're going to have them. They're just not going to be updated to the week.
Yeah. Right. We're doing this show before the market closes on Friday, just to give you guys a heads up. But the reason I'm bringing it up is, again, if you're a member, you're still going to get that in the weekly update. You're still going the newsletter. Yeah, absolutely. So, those of you that watch the show and you get this for free, every once in a while we're not able to do that in-depth analysis on Friday after the close. This is one of those weeks we're traveling. Yep. But if you're a member, you're still going to get all that stuff in the newsletter. Yep. All right, man, let's kick it off.
All right. So just to kind of follow up on that, TSP Update Show, 7 November 2021. Ordinarily, this is the market this week's slide. And I don't create this slide until after the market closes on Friday.
Right. So we don't know.
We got a big question mark there. But I will, once the market does close on Friday, I will update this slide and put it out like I have been for the past few weeks.
On the Facebook group?
Yep.
Yeah, it blasts out there. Yeah, and it's just for you guys that don't know what that is, it's just a little graphic that shows where each fund closed at.
Right, for the week.
Yeah. And just to give a plug to the daily TSP app, which is a totally different app, I would call it a companion app to us. I think they're a great product.
Yep.
Very good price for that product. But if you get their app, it gives you the closing prices every day.
Yeah.
And then at the end of the week, you have all that stuff. So that's great.
Yeah,
when you mix that app and our app, I think it's a great combination.
Yep, definitely. Okay. So the show this week, there's been a lot of talk about things that are changing with respect to TSP in 2022. We're going to get into a bunch of that. I have done a bunch of research in the past few weeks about it, and we're going to do a longer webinar about this topic sometime in the next couple of months. But this is going to be kind of an overview of that and what we know at this point with respect to what's going to be happening in 2022. Then we'll do the updated long-term Elliott wave count chart. The bonus chart is going to be this company called Elliott. A-L-I-T is the ticker symbol, and you'll
know why we're doing that.
You'll know why in a minute why we're doing it.
You want to pay attention to that one.
Yeah. And then the 20-month weekly charts, but again, they're through Wednesday, November 3rd. They're not through the close of the week. All right. So TSP in the 21st century. Basically, TSP has really, really expanded what their offerings are going to be and services and things that have been rolling out in the past couple of years, actually, in the form of better withdrawal options. That was really the first big part that we saw. Going forward, they got two primary contractors that are working this project, Accenture Federal Services and Elliott Solutions. So Accenture is a record-keeping services acquisition contract. The procurement encompasses everything from managing the TSP call centers and software that process participants' transactions to improving the plan's cybersecurity posture and IT infrastructure. Accenture will also help the FRTIB, the Federal Thrift Investment Board, provide several new services, including a mutual fund window, electronic signature capabilities, and a mobile app for the plan's participants. So that's Accenture.
That's huge.
Elliott Solutions is a business process outsourcing company based in Lincolnshire, Illinois. It's a cloud-based provider of integrated digital human capital and business solutions with proprietary AI and business analytics. The company went public on July 6th, 2021. So it's a brand new publicly traded company.
It's like the other day.
Yeah, yeah. Which hence why it's going to be the bonus chart. Trades on the New York Stock Exchange under the ticker symbol ALIT. So what they do is 401k management, benefits counseling, financial management, human resources, health benefits administration, and payroll. Elliott's customers include about 70% of the Fortune 100 companies, more than half of the Fortune 500 companies, and among its big-name clients are FedEx, Home Depot, Ford, PepsiCo, Target, Citigroup, and Bank of America.
So let's read between the lines there.
Yep.
They didn't just appear in July of 21.
The company did not just appear.
Right.
It was private.
Yeah, it was in a different form, went public.
It did a SPAC, if anybody knows what that is. It combined with another company that enabled it to go public without going through the whole process of going public.
Exactly.
Yeah.
I liken this to when the government goes to a contractor that's, and I've almost forgot the term because we've been out of the game so long. What is it when you go straight to a contractor?
Sole source.
Sole source. Jeez, I can't believe I forgot that. I know.
Hasn't been that long.
I'm glad that I forgot that. It means the transition is working.
Right.
Retirement is great. Yeah, I liken this to a sole source contract where they say, okay, who do we think can do this? Yeah. Oh, they're not a public company. Well, they got to be a public company. Bop, 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 bop. Next thing you know, they're a freaking public company, and they're providing the solution because they're the ones that could. Hopefully, they chose for the right reasons.
Yeah. Yep. We're gonna get to some of that. Yep.
We got months and months of talking about that.
Oh yeah. Yeah.
This isn't going away. This isn't just this show.
No. This is going to be the topic of conversation in TSP until if it comes out as scheduled in June, particularly the mutual fund window, which we're going to get to. That's the thing that's probably the single biggest thing as far as I'm concerned. There's a bunch of good things that are going to happen, and we're going to kind of highlight them.
There's a bunch of unknowns.
And a bunch of unknowns. We're going to highlight them too. But we're going to be talking about this. They're going to be talking about it on Federal News Network.
Yeah. But I'll put our spin on it right now and say that you're going to get the government employee, military person view aspect of this, not the hey, marketing pitch, we want you to do this, feel good about it pitch. Because that's what you're going to hear in the news. I know Jerry's going to get into this, but a lot of the buzz already has nothing to do with really why they're doing it. And I know you're going to get into this, but this has been in the works since like 2009.
2009, that's when the law passed.
This isn't new. This isn't the Biden administration or the Trump administration or three administrations ago. Yep. This has been coming for a while, but it wasn't reality until now. Yep. And we're going to keep talking about it.
Okay. So those are the two companies. Highlights. So among other things, what we're going to get is a mobile app. It's going to have chat functionality with an AI virtual assistant. If you have other problems, it'll push you to a real person, but primarily it's an AI virtual assistant. You're going to be able to digitally scan checks if you need to pay back loans or whatever, contribute money into TSP. They're going to have what they're calling a concierge service that will facilitate you in rolling over qualified IRA funds into the TSP. So most of the time we're talking about doing rollovers out of the TSP.
Right. Inside out. This is talking about outside in. So
Yes.
your spouse or you have another
if you worked
qualified
if you worked at Accenture and you had a 401k plan and now you moved over to the government side, you can roll your 401k into the TSP, and this is how you do it.
It's all good stuff.
Yep. This is going to be a big one. Biometric data to access your TSP account. So you're gonna have to completely redo your username and password, the two-factor authentication, the whole thing. And I did read in there in this tons of research I've been doing. They have a sort of a qualifier line in there that says there may be a short period of time where you don't have access to your account.
Yeah, and that's just going to be when they're updating. I'll throw a flag on the play here. You know, Jerry and I were at DHS for almost 20 years, plus 20 years, whatever, in the government for over 30. Yeah. The point is, and I've always been kind of in, so if you guys anybody's familiar with the Homeland Security Information Network, HSIN, you know, I was there when it was kind of built, and we've always been talking about biometric, you know, ways to, we talked about it on our CAT cards, we talked about it on our access, anything to access. The actual execution of that is so freaking hard, and getting it to work consistently. I mean, like every time I want to log in to do something, it's got to work, right? I'm going to say that's going to take a lot longer than they think, unless they figured it out and nobody else has, because right now you don't use biometric data to log into a lot of things.
Pretty much anything, right? I mean, if
even the DoD right now, CAT card is it. We went with, you know,
the fingerprint.
Everything's gone away for that. It's eye and finger and
I don't know how you would do it.
What's still around? An access card, right? Or a password.
Yeah. I mean, they're not going to issue out, I don't think, a CAT card or some version of a card that you have to, because then you have to.
Too expense. And then you got to have the reader.
The reader and the whole thing.
I'm waiting to see the biometric piece. I don't want to keep, you know, harping on that. The same thing with the virtual assistant. Anybody that goes to a website now knows that when you type it in there and it's trying to figure out what you're asking, you're just getting frustrated. And
it's a FAQ database. And it's just an AI kind of interface to the FAQ database.
The good thing I will say is that they're trying.
Oh, yeah.
They're trying, and they need to, because we're so far behind the power curve on the TSP, you know, being able to really make a functioning website, much less an app, you know. So I'm not going to beat them up. But
it's going to be interesting to see how it rolls out. Okay, the last one here is mutual fund window.
It's
huge. So that's kind of going to be the majority of what we're going to go over here for the next few minutes. Okay. So I'm just going to highlight pieces of a 2015 recommendation memo from the Federal Retirement Thrift Investment Board, right? FRTIB. The executive director is Greg Long, or at least it was back in 2015 when he wrote this memo. So the memo goes to the whole board, okay? And I attached the link. Pen works.
It's down at the bottom. Yeah.
Here's the link. You definitely want to go check it out. There's a ton. It's like an 8-page memo.
But remember, it was written in 2015. It's 2021.
Yeah.
So we know how those memos can get outdated quick, but that's what's publicly available that can give you an idea, an insight into what's going on, right?
Yep, definitely. It's the most recent
public information.
Factual, you know, it's not some reporter's spin of the thing. We're going to get to the reporter's spin in a minute. Okay. So the link takes you there. You definitely want to check it out. Here's some of the highlights. In 2009, the Thrift Savings Plan Enhancement Act was passed, granted the board the authority to establish a mutual fund window, in addition to the plan's current investment offerings of 5 core funds and the lifecycle funds. The executive director's office has been studying the mutual fund window option, looking at participant interests, cost estimates, and operational considerations. They generated 3 different studies that formed the basis of the recommendation memo. So in terms of participant interest, a review of the defined contribution industry, right, which is basically 401k plans, which most companies don't have anymore. It's a pension plan. Sorry, that was wrong. Defined benefit is the pension plan. Defined contribution is what pretty much everybody has gone to, right? Okay. So they looked at the defined contribution industry surveys, and the surveys revealed that mutual fund window and brokerage window offerings have been on the upswing, with 12 to 29% of plans offering this option. However, the number of participants, 1%, okay, only 1% of participants are using these offerings, and the amount of assets, right, the amount, so your assets are what you have in TSP, for example. The amount of assets are only 1 to 3% are invested in the mutual fund window. Invested in the mutual fund window, they have consistently remained really low over the past 5 years.
Usage of it.
Yeah. So basically these 401k plans that have an option, they have, similar to TSP, they have, say 5 core
They've already
options.
done what we're looking
we're
to
going
do.
to.
Yeah.
Right. So they have like the 5 core options, and then they open up a mutual fund window. Only 1% of people in the survey on average are using the mutual fund window piece of the 401k package.
Are we going to talk about why?
No.
Okay.
No, we're not going to talk about why.
Okay.
And of that 1%, only 1 to 3% of their assets are actually
right
in the mutual fund window.
Even out of the small group of people that are doing
using it. Yeah.
This even smaller portion of their portfolio is in that.
Right.
Yeah.
Okay. So
I'm going to say it right now, because it's hard enough for people to wrap their heads around 5 options.
Yeah.
If you give people 5,000 options and you don't tell them how to do it. Right.
These are all self-directed plans. There's no one helping you through this
except us. That's what we're trying to do. Yeah. And I don't mean that to be a plug. I mean, honestly, the whole reason we do this show is because this didn't exist. Nobody was doing this, and we were frustrated. Yeah. And we're like, man, let's talk to people about it. We're the only ones that are going to try to walk you through this maze of chaos, which is going to be, if you think it's crazy to keep with the CS&I.
Yeah.
But with that said, if you are educated, this is a great thing.
Absolutely.
This is a great thing, because there's lots you can do with it, regardless of the rules, how it's going to play out. More options are better.
Yep, definitely. I think so. Okay, so we said 1% of participants are using it. They're only contributing 1 to 3% of their assets into the mutual fund window. These are very low usage rates, and they're in stark contrast to the reported interest of TSP participants. Specific to TSP participant interest, a 2013 survey resulted in the chart above. So let's look at this chart first. In 2013, they went out, their savings board went out to participants and said, what percent of you would agree or strongly agree with this statement? The TSP would be a better program if it provided a mutual fund window. So 36% of people thought, yes, the TSP would be better if it had a mutual fund window. So the second question is, I would transfer some of my TSP account balance into a mutual fund window. 29%. That's huge, considering that the industry average is 1%. Right? 29% of people in TSP want a mutual fund window. And 22% of them said they'd be willing to pay an annual fee to make it happen.
Right. Meaning you could pay more to have the access to that window.
Yeah. However that turns out, right? It could be I pay an annual fee, and then we'll get to the potential whatever, but you know what I mean? Someone's going to pay for it.
Yeah, it's not going to be free.
It's not going to be free. Whether or not they distribute the costs to everybody across the board or just those people that choose to use the window.
Yeah, we'll see.
We'll see. It's one of the up in the air questions. Okay. In terms of cost, based on the review, they provided a rough order of magnitude estimate of a range between $6 and $10 million to make the required system modifications to implement the mutual fund window. Okay, so it's not cheap, and it's definitely not going to be free. So again, there's a ton of great background info in the memo, but I'll just end it with this, and then we're going to go over the pros and cons. The Thrift Savings Plan Enhancement Act, which allows, so this was actually a quote from the memo, so definitely go back and take a look. The Thrift Savings Plan Enhancement Act, which allows the addition of a mutual fund window, makes explicit the board's responsibility to consider all terms and conditions of the mutual fund window in light of the fiduciary obligations. The statute protects the fiduciaries, not us TSP subscribers. Statute protects the fiduciaries from liability of investment decisions made by participants in the window, and protects them from liability for establishing restrictions applicable to participants' ability to invest through the mutual fund window.
English, please.
The last piece, establishing restrictions applicable to participants' ability to invest through the mutual fund window. That's going to go to one of the things we're going to get to in a minute. What are the unknowns? In the universe of mutual funds that they could allow us to access in the window, they have the ability to restrict what we can and can't invest in the window. Mm-hmm. And it puts all the onus on you, the investor. That's the bottom line.
Yep.
If you invest in things in the window for whatever reason, and they lose money, you can't go back to the TSP and say, "Hey, you should have known not to give me this choice."
And that's reasonable, right? Because you can't do it now. We're only pointing it out that they're not in this game. Don't get it twisted. They're not in this game to help you, right? They are in the game to make their more choices available.
Yep.
And I'm always going to keep pounding this, that when we talk about the language you just used, if you put in educated investor versus investor, things start to change. Like we know in our world, right, an accredited investor, right, yep, which is a formal term. If you are one of those people, and you can Google it, you can invest in things that other people can't. Yeah. You're allowed to because you supposedly have a level of knowledge and education and experience or whatever.
Or enough money. Yeah, one of the two.
Enough money that you can, we don't care about you. You right. can lose it. And they don't do that to poor people. They don't do that to uneducated people because they're protecting us.
Yes.
Right.
And it goes into that in the memo.
Yeah. And
definitely
so
read the memo.
That's going to be built into this system. And I'm not saying all this to say it's a bad thing. Right. I'm saying that regardless of whether you get it from us or whoever, you've got to educate yourself on all this stuff, because when this happens, it's only going to get more complicated. Yeah. But with complication, with choices, with opportunity, right. Comes opportunity. Right? Yeah. Yeah. I mean, there's opportunity to, and I know Jerry's going to get into this, and I'm just I love this. I love the fact that they're doing it because it's going to give us a cubic butt ton of things to talk about. Yeah. But even more importantly is if you truly understand what's capable when this happens, you can really, really, really grow your retirement account. Yeah. You really can. Way faster than you could have.
Than the 5 core funds.
Oh,
yeah.
my gosh. Oh, yeah. Absolutely. Yeah. Absolutely. But
right.
I'll leave that to you.
So let's get to a list of, actually, let's go back real quick. So both of these graphics are in the memo. All right, so we went over the survey. So simplistically, the pros are it allows TSP investors more choice, protects the simplicity of the core lineup because they're going to continue to have the 5 core funds and the L funds. It encourages asset retention, which is a big one for the TSP, meaning they're doing everything they can to keep people from rolling out of TSP into Fidelity or Schwab or something like that. May lower the fees for all participants as more assets are retained in the plan, right? So if less people roll out of the TSP, it'll keep more assets in TSP and keep the fees lower for everybody. And provides fund usage data for future core menu reviews. Okay, great. The cons: adds plan complexity to help a vocal minority. So I think we are the pinnacle of the vocal minority. On anybody who's watching the show and kind of agrees with our sort of methodology and things, we've been, I think, beyond the 2 rules a month, the 2 moves a month, and the noon rule, an expanded, menu of fund options would be by number 2.
Expandable portfolio option, yeah.
So that I think we're definitely the part of that vocal minority. Introduces higher cost investment options. Yep, mutual funds are expensive. Increases the risk of poor investment decisions. We're gonna get to that in a second, but yeah, you can definitely make poor investment decisions if you have a universe of funds that you can choose from.
Because of the volatility.
Yeah, the funds are based on a theme, right? You could have a tech fund, a utility fund, an energy fund,
transportation,
anything, right?
Any of the sectors you can possibly imagine, and a combination of industries. So you've got tech and farming.
Sure.
A lot of people would look at something like that as like a hedging thing, right? Where they're like, okay, well, if tech is up and farming's down, that's still going to balance out. Like, there's a lot of ways to look at it.
Tons.
And when you talk about thousands of options, that's what you get. You get these combination funds that are just combinations of all kinds of crazy things, and you get duplicates. Right?
Yep.
You get 5 or 20 that are kind of the same thing with just a little twist.
Yeah.
And at the end of the day, you're not really doing any better off by being in any one of them.
No, right? No. I mean, the fee structures of the funds themselves might be more or less, and then that's an important thing to look at. But
yeah, and I'm that's one of the huge unknowns. There's quite a few, but going back to that list that you had of cons.
May overwhelm participants with investment choice.
Well, that one definitely, but the other one is that introduces higher cost investment options. So let's dig into that for just a second.
Sure.
What do you mean by that?
So right now,
when you say mutual funds are expensive, because that's what you said when you mentioned that. Like, what do you mean by that?
There's a lot of overhead. I mean, if you're tracking the SPX, which is the index, right? Let's say you're not in TSP. Well, let's say you're in TSP. The C fund tracks passively tracks the S&P 500 index. There's nobody that has to.
It's not a lot of overhead fees.
No, there's no thinking. You're passively tracking that index. If you built a company that said our objective is to beat the S&P on a daily basis by 1%, now you have somebody that has to go out, a fund manager, and find companies that are similar. Either find companies that are similar to the S&P that are going up 1% or more on a day when the S&P is flat, which is ridiculous, or you're doing options.
Right. Bottom line is there's a
work. There's a ton of work for really smart.
And with work comes fees.
Right.
Yeah. With if there's more involved in making that happen, there's going to be fees. Right. And so mutual funds historically have had higher fees.
Yes.
And that's why, a lot of people kind of look down their nose at mutual funds at this point, right?
Versus ETFs.
Right. I was going to say early on, way before ETFs, mutual funds were the thing.
It's the only option.
Right. Mutual funds also only have a closing price. There's no intraday.
Right.
Right. So if you're a technical analyst, there's not a lot to go on. You just got closing. And ETFs don't. They've got intraday. Right. So, mutual funds are going to solve some of our problem, but they're also going to bring other problems. They're going to bring with it. And if you don't understand all of that, and it's really not that difficult, right? I mean, I would argue if anyone that's watching this, spends a couple of months just trying to figure this stuff out, you'll have a good enough base knowledge to go, okay, I know what everybody's talking about, and move on. And that's not a bad investment in education. To spend the next 20, 30 years managing your retirement, because you can do well with just the 5 funds. You can do a lot better if you got more options, but you have to understand what you're getting into because the volatility leads to, one of those cons that you had there, increased risk of poor investment decisions. I don't have my glasses on. I'm trying to read it really small on my screen. And poor investment decisions, right now, we joke about it all the time. If you weren't in the government in certain decades, you've never seen what it looks like to lose half your retirement.
Right.
Go ahead and put that in the wrong mutual fund and see what happens. That'll happen twice a month.
Yeah.
You could lose 30, 40% of your retirement.
Right.
If you choose and you're less, well, I would invest in shrubbery.
Right.
I don't know.
Whatever floats your boat that you want to invest in. I mean, we're going to get to that in a second too, but yeah.
That's what we want to. We want to throw a red flag on that for everybody to think about that. Just because you get these options, this is the spin you're going to hear on MSNBC and Bloomberg and Yahoo and all of it, because it's fun to talk about. But it's going to be something like, everybody's investing in. We'll just say crypto is a great example. We're probably not going to have crypto mutual funds anytime soon. ETFs maybe, but point is there's going to be the flavor of the day, right? Yep. And that's where people are going to be talking about. And because they're talking about it, you think that's where you should go, and ignore all that noise, because what is the fund doing?
Right.
Right. What is the market?
On a performance basis, not what's the fund doing? Like it's planting more trees or, what? I mean, if that's your thing, if you are interested in what the fund is doing and you want to invest in that because it makes you feel good, that's awesome.
I would say do that in a brokerage account, not your retirement account. That would be my.
Yeah.
I don't give a lot of advice, but I'd be like, stay out of your retirement account.
It depends on what you're trying to accomplish. If I'm looking at a chart, of whiskey, and it breaks out of a long-term consolidation pattern, I'm going to buy it. If I'm a beer drinker or a teetotaler or whatever, right?
Right. It has nothing to do with the whiskey.
Right.
It has to do with the fact that it's going up.
Right.
Absolutely.
Yeah. All right. So let's look at some fun mutual fund window questions. So basically the answer to all of these is I have no idea. They're not, the answers aren't available yet.
The disclaimer is we don't know the answer.
So these are basically my questions, having spent the last week or two of pulling together as much stuff as I can and really trying to get ahead of the power curve.
You've gone down a lot of rabbit holes in the last week or two.
Yeah. Okay, so an easy one, right? How much of my TSP funds can I apply to the window? The answer is we don't know. The TSP could absolutely restrict the amount, the percentage of your assets that are eligible to be invested in the window. So we'll have to wait and see. There's a ton of open questions, and we'll have to see what the rules ultimately are. Do the two IFT and the noon rules still apply? Again, the answer is we don't know. As it is right now, if you go to Elliott, they don't have those kinds of restrictions in the window. So is it possible that if you're in the 5 core TSP funds, the 2 IFT rules and the noon rule does apply to you, but the percentage of your money that's in the window, those rules don't apply? Yes, that's a possibility. And there's, it'll be interesting to see how TSP rolls it out. Will ETFs be offered in the mutual fund window? We don't know. I haven't seen anything that talks about ETFs being an option in the window, but I did see in Elliott that ETFs are an option in the window.
Right.
So I haven't seen anything in Federal News Network or any of the other sources that talk about.
I hope that they look at this as being short-sighted not to, right?
It would be short-sighted not to have ETFs.
Not to put some ETFs in there. Who knows how they're going to structure all this. I think it would be short-sighted, but hopefully.
Now, if it would be great for us, whether or not, is there a political piece to it? I have no idea. And that actually goes to the next thing. So if you have Googled any of this, if you've seen any of the articles, the focus, and I'm going to call it the spin of it, tends to be now government employees can invest in ESGs. So if you've never heard the term ESG, it means environmental, social, and governance, right? They're funds that are like green anything is the flavor of the day, right? So if you invest in any kind of environmental protection type of, social issues, governance issues, there are funds that are based on all that. Tons of them, tons of ESGs. If you invest in an ESG that saves the
planet in some way,
the water, right? It's a some kind of Greenpeace fund, right? That's awesome. If you wanna save the killer whales and stuff, that's awesome. But your thing has to be.
And we're not making light of it because we are very concerned about certain social issues, right? We're kind of sounding a little flippant about it right now. And the reason is because although we care about social issues, we do not structure our retirement account based on whether I want to stop cancer.
No, I'll give my own money, donate my own money to causes.
I'll donate to causes, but when it comes to my retirement account, I don't know, is that company making a profit?
Right.
And is the trend going up in there?
Right.
That has nothing to do with what they're fixing.
Right.
Right. And so I want you guys that are listening to this to separate those two, because if you don't, every time I hear ESG, I think emotional investing.
Yeah.
That's what as soon as I hear ESG, I'm emotional investing, which is what we try to get people to not to do.
I mean, it's right? fine as long as, like you said, you make a distinction, right? You draw the line. So if it makes you feel good, if it makes you sleep better at night, all those kinds of things, you're doing good things for the world and all that, then do it. If your goal is to make your retirement savings grow, if those ESGs are going up relative to the S&P, great. You get a twofer, right? You get to feel good, and your account grows.
Right.
If not,
to take a traditional kind of advisory approach, if you had $1 million in your TSP, let's say you've been at it for 20 or 30 years, you've got close to $1 million, and you say to yourself, hey, you know what? Regardless of how well it's going to perform, I'm going to take 10% of my portfolio, and I'm going to put it into social causes I believe in.
Yep.
That's okay.
Absolutely.
Right?
Sure.
And we haven't had the ability to do that in the TSP.
Right.
But now you will. So if that's how your approach, that is absolutely okay.
Absolutely.
But to say that because the buzz is environment, social, government issues, I'm going to put my 50% of my retirement in there.
And think it's going to grow.
Right. No. Don't do that. No. Please don't do that. Yeah. Don't take my advice, but get educated.
Yeah.
Don't do that.
Yeah. And so, like the last one, will there be restrictions on investment choices within the window? We don't know. There certainly could be. There's, depending on which of these articles you look at, there's anywhere from 4,000 to 7,000 options in the window. Will the government, because the government is actually the customer, right, in terms of the window, and so the government,
the vendor is
the vendor is Elliott. The government's the customer, and we work for the government. So can the government put restrictions on the investment choices within the window? Absolutely.
Yeah. And again, I'm gonna break my crystal ball out. And after working for the government for 30 years, I'm gonna say we always err on the side of being restrictive.
Yeah, I would agree with that.
Because it's liability, it's protection, it's we've always done it this way. It's if we go from having 5 options to 5,000 and all of these choices and very few restrictions, man, I'm gonna eat my words.
It would be awesome.
It would be awesome. I don't know.
Yeah,
I'm gonna have to see it. I'm gonna have to see it.
I agree.
But I do think what we're gonna have is hopefully a better version.
Way better. Yeah.
A better version than what we have, and we can't make light of that because not anything, but there are better ways to do, and hopefully, and again, like you mentioned, this has been going on since 2009.
2009
is when they
got the authorization to do
it. The government said, yes, you can do this in 2009. It's 2021, and we're talking about executing.
Just implementing, yeah. And so the law passed in 2009.
Yeah.
So how long did it take before?
That's what I meant. Legally, we could do it.
Right. But I mean, how many years did it take to get to the point where to pass the law? Right. I mean, this thing's been going on
for a long
since
time.
The mid-2000s.
Right. So hopefully they execute. Hopefully this doesn't go away.
Yeah.
I don't think it's going to go away. Too many people would go crazy.
So all the stuff we just talked about, I pulled out of these links. You can go back and take a look, make your own decisions about any of this stuff. The couple that I would look at, this PDF is the memo. This is a brochure about Elliott Financial Solutions. I would look at all of them. There's a lot of good stuff. Okay. Moving on to what we do. The current Elliott wave count. We've been talking about this more or less for the last couple of months. Things haven't changed a whole lot. We've been talking about, and it's still a little bit of a question. In the big scheme of things, since the bottom of COVID, we've progressed in 1, 2, we're working on 3, 4, 5. That's how I think, that's my current plan A for Elliott. Plan B would be 1, 2, 3, 4, 5. So what it comes down to really is this 4-leg, is it part of just the 3, or is this the 4-leg from the whole thing? And
the difference is still going up long term, but there would be a dip, right?
Well,
looking at that chart you just drew, I'm
right.
just trying to show the difference between those two you drew. Like the one you drew, we're basically hitting the 5 and we're going up. The other one is no, we're going to go down to 4 and then back up, right?
So if we're getting close to some kind of top right now.
Yeah, and this is your plan A.
This is my plan A.
Yeah, this is where you think we're going.
This is what I think. I think we're getting to a top, and I think that top is only relative to this move right here. That's what I think. So if that's true, if it's only relative to this move, then we get some kind of correction down to a 4, and then we get a move that goes much higher into next year.
Mm.
If my plan B is that 1, 2, this 3 is actually this 3, right?
So it just skips over that little dip.
Well, no, then that dip, this 4, is this 4.
Yeah,
right?
It's already happened.
Which would mean the 5, and then we're done. And if we're done, what comes after that? If this is a 5 up here, we get something like that.
That's kind of where I was getting to.
Yeah.
It's because both versions of A and B version of that shows a correction.
Yes.
Right. What people need to understand, and it's not just us saying this, right?
Yeah, right.
I mean, just about every day you can go out into the financial news media, and you're going to see there's a bubble. Yeah. We're at an all-time high. You're going to see a lot of people doing the Chicken Little.
Yeah,
right.
Definitely.
Sky's falling.
Yep.
Why? Because everything is saying, and we don't know when. That doesn't mean it's coming in November. Don't misread that.
Yeah.
Nobody has a timeline, but everybody sees the same signals.
Right.
So all we're telling you guys listening is pay attention.
Yeah, be aware.
Pay attention, because you can get out, right? Even if it's not the day it happens, you can still get out.
Right.
This one is going to be a nice little correction that you're not going to want to ride all the way down. Whether it's a little correction or a big correction, you don't want to ride this sucker out. You don't want to buy and hold. Please don't. I'm asking you now, begging you.
When we get to this 5, whether it's early
there
next year or back here, when the correction, when the trend change gets confirmed, so you get this long-term trend line from the low in COVID. You've had a couple little bobbles since then. At some point, we're going to get a significant correction, and at somewhere in here, it's the correction that the change in the trend will be confirmed. And once that confirmation happens, you don't want to be in the stock funds.
And if you're following our alerts, I'm gonna put money on it that we're gonna be out.
Yeah, we'll be out.
We're gonna be out because we're watching it like a hawk.
Yeah.
And if you don't want to watch it like a hawk, then just watch
follow
us.
along.
Follow along.
So that's where we are in the big scheme of things. All right. So as we said, ALIT is the bonus chart. This is the Elliott, the company that is providing the mutual fund window. So I thought this was really interesting because once I got digging into it, I'm like, all right, who are the contractors that are on this thing? And Accenture, okay, everybody knows them. Elliott just had an IPO back in July 2020. So I pulled up a chart of Elliott, and this is it. it seemingly doesn't take into account the fact that they're going to get 6.3 million TSP subscribers. They won't get the assets under management, but their business should increase dramatically, and obviously just the fees that they're being paid by the government, the contract for this has to be huge, but it isn't seemingly appearing yet in the stock price. So I'm going to watch it pretty closely, because at some point I got to believe this thing's going to take off, because if not for nothing else, just because of that one government contract.
Yeah, I'm surprised it hasn't taken off at least a little bit just from the announcements lately. But most people aren't going to dig into this fundamental data, right? Because if anybody hasn't caught on to what Jerry's been doing for the last 2 weeks, part of this is fundamental analysis.
Yeah, absolutely.
Right. And so a lot of people think all we do is technical analysis. No. And we're not going to dig into all of that right now. But the idea is that, with 5 funds and with them being large indexes, we don't really need to do that. Right. So technical analysis is our friend. When you start talking about these things, you have to do a little fundamental. Right. You got to dig in a little bit just to get a scope of the landscape to go, okay, this is where now I'm going to look at the technicals. Right. And that's what you're doing.
Yeah. And I mean, I think this mutual fund window is going to be great for everybody. It's going to be great for us for talking about things on the show. It's going to require a tremendous amount of work more on our part to figure out how, let's say we have access to 5,000 mutual funds. The goal is to be in the funds that are outperforming the market, right? If your universe of funds is 5 to help you outperform the market, it's pretty simple. If your universe is 5,000, it requires a completely different level of work. It's got to be your day job.
It's got to be your day job.
And it's my day job now, but it's going to be my day job here.
Yeah, but the reason why we created this was most people can't even do it with 5.
Right.
Because, when back in the day when we were chasing bad guys all over the world, that's your focus, man. I don't have time.
Oh yeah, nobody's going to have time.
You find time for it because it was your happy place. It was your hobby. I don't want to call it a hobby because it's a little bit more than that. But that's what you would do. And so, but most people aren't going to unless you're really into it. So, this is going to change the landscape for us. I think in a lot of good ways. But I'm hoping that most people can realize that. And I'm kind of hoping more people do what we do, but here's the thing, here's the reality, and this is the toughest part about this, is I've had people ask me like, well, why don't other people do what you guys do? Why aren't they interested? There's hundreds of thousands of financial advisors out there. Yeah. I'll tell you why, because you don't have enough money to get their attention.
Right.
And they're like, well, I got $1 million in my account. I'm like, but there's like, it's up on the wall somewhere up here. There's like 98,000 of you
TSP millionaires
out of 6.2 million.
Yeah, and if you're not retired.
My point is, and they don't have your assets, so they're not making any money. So they don't care. God forbid if you have $200,000 in your TSP. You're not getting. If you had $500,000
in your IRA,
you might get their attention.
Maybe.
And I hope you guys see what I'm talking about is this doesn't fit into most people's paradigm of like, oh, I want to help these folks. No. There's no value in it to them, right? There's value into people like us because we've figured out a way to basically say, okay, let's educate everyone, right, and not provide advice, but provide education. And if you get educated, this isn't that difficult.
No, it's not.
It's difficult to become, like. To day trade and to all that requires a lot more to manage your account, looking at it once a week, all the things we talk about, you can do it.
Absolutely,
you can do it with 5,000 options. What you really need is hopefully what we're going to be able to do, which is let's divide that 5,000 into some smaller buckets, right? And I know that's what we're going to do.
Absolutely,
we're going to be 5,000. Well, really, there's only about 11 buckets or 12 buckets, right? That you really need to be focused on.
Yep. Yeah, I'm looking forward to it. I think it's going to be pretty exciting. It is.
Yeah. Jerry gets goosebumps.
So if we just look at the chart, so there's nothing particularly interesting about the chart in terms of it breaking out, or like I certainly wouldn't buy it. But the biggest thing is that I thought we would be able to see a big uptick when they signed that, or shortly after or before, or around the same time they signed that government contract. And we're not seeing it, mostly because the contract was actually happening back here before the company was public. So at this point, Elliott goes public. We got a really nice saucer pattern here and a big breakout right there. That would have been a great time to buy it. It wouldn't have been on anybody's radar, but obviously it would have been a great time to buy it because you could have gotten into it at about 10.50 right there, and it went up to 14.50. So, 50% on your money right there. Of course, if you had taken the drawdown the next day, then it would have been bad. But so IPO's up here, does a bottom down here at $8.50. We get this kind of triple bottom pattern right here, and it moves higher. We got a 1, 2, 3, 4, 5 Elliott wave pattern up. We got a retracement back down to the 50-day or 50% retracement level. Came back up, back down to the 50%, and we're kind of consolidating along that 50% retracement line. If I'm looking at this in terms of buying it, if I draw a trend line across there, if it closes below that trend line, it's likely to have another leg lower. But that 50% line is obviously pretty significant because it's been right in there for the last 6 weeks or so. So if it breaks to the upside, maybe I would consider buying it. So why would I think it might break to the upside? On balance volume. So on balance volume is when people are buying more shares than less shares, the line goes up. When people are buying, let me see how to put this. When there are fewer shares trading, the line's going down. So it's the on balance volume. If the volume of people, I'm having a hard time explaining this thing. So
if you can't explain it, we're not going to get it.
If the volume is positive, right? Volume can be positive whether price is moving up or down. So if you have, it's easier if I have a chart, because the price, when the price line is black, the price is higher, and the volume line is black. It means the volume is going up on a day when the price is going up. But on balance volume, you have an amount of volume that's going up and an amount of volume that's going down, and the on balance obviously is the difference between the two. So what you get is as on balance volume turns positive, there's more positive volume happening regardless of price. There's more people buying. There's more momentum, more people buying on volume as price is going up. So basically, this is a leading indicator, and as I look at this, it looks like the on balance volume would indicate that price should move higher from here. It doesn't mean that it will, but on balance volume is a pretty good indication of where people are actually putting their money. It's not price. Right, and price is the most important thing, but the volume matters a lot, right? It's sort of a.
We always talk about how price is first.
Price is always first,
and volume comes in at a close second.
It's definitely second,
and then all these other indicators that we talk about really are about which ones speak to you.
Yeah.
Right. Which ones tell a narrative that you understand to say, oh, I see a leading indicator.
Yeah.
Or a lagging indicator. Or, right?
Yeah, I have a chart. I don't have it up on the slide deck, but I have a chart that shows volume, up volume days, and there's a line, and it has down volume days. And so it's basically this chart connected all those together as a closing price, and so it's easier to kind of see this way. But I have a chart that shows the up volume and the down volume over time. So it kind of does like that. And this chart just happens to connect it all together and make it kind of easier to read. But the bottom line is, it's entirely possible that, given that the on-balance volume seems to be stabilizing and moving higher, and we're at the 50% retracement level, could we get a pop-up and start moving back up? Absolutely.
And knowing some fundamental analysis that these people just want to, A, they just went public not too long ago.
Right.
B, they just got this massive government
Yeah.
contract. You want to be watching this.
It's on my watch list.
Yeah.
Yeah. Yep. Okay. So to the TSP funds as they are right now. All right. So we got a 2-year chart of the C fund. Not too much has changed. Again, we're doing this on Wednesday night. So the last box right here, it's not the weekly close. It's the close as of Wednesday night. So who knows what's going to happen over the next 2 days. But where we are right now, we've got 1, 2, 3, 4, 5 consecutive up weeks for the C fund. And we got a really nice up volume week that week. So we had a couple of weeks of increasing prices but declining volume. And then we had a big up volume tick, which is really good. And so the reason that this volume on this last week is so low is because it's only goes through, in this case, it's actually Tuesday. Because it's Wednesday now, but it hadn't had time to update the volume for Wednesday night. So the reason that line is so low is because it really only is for Monday and Tuesday of this week. So no reason not to be in the C fund at this point. We are definitely above the prior high. If you connected the trend, we're pretty much there. So, can we get a correction from here? Yeah, I'm definitely looking for a top at some point because we talked about it. We need to see that 3. So, no reason right now not to continue to be in the C fund. But I don't think anywhere else in this chart, maybe back here, I don't think anywhere else in this chart, let's see, 1, 2, 3, 4, 5. This is the only place in the chart you're seeing 5 consecutive weeks, 5 consecutive up weeks until this right here. So we'll see. The other piece of this chart is the chart on the bottom is the S&P versus the S fund, because we want to be in the stock funds that are outperforming the other funds. So the S&P, so VXF is the ETF for the S fund. You get the S&P moving higher, the relative S&P to the VXF coming down, flattening out, and then moved higher, but looks like it kind of wants to go the other way. So we're going to get to that a little bit in another chart, but it's just something to kind of look at. Okay. Let me back to that for 1 second. So here's the thing about that. C fund versus the S fund, right? From the COVID low, the S fund did really, really well until it topped out in February of this year. If the C fund is in the numerator, right, because it's the C fund relative to the S fund, the C fund underperformed the S fund from the bottom of COVID to February of this year. Since then, the C fund has been generally outperforming the S fund, right? Because we know the C fund was in this flat consolidation, or the S fund was in this flat consolidation, and the C fund has been continuing higher in price. So the C fund has been outperforming the S fund. What we're seeing is that relative outperformance peaked in August. Is it possible now that it starts to curve the other way and the S fund again starts outperforming the C fund? That's something that we're really closely looking at. Have we seen the peak of relative performance of the C to the S? That's all I'm going to say about that. Okay. Here's the S fund. Like we said, it's been in this flat consolidation since February. So, before we get to the relativity, that's a big breakout. If this was actually a weekly chart, if this was actually the close on Friday, that's a huge move, clearly outside the top of the channel. And the relative strength chart under here, while it had been declining to August, it's now flattening and looks like it wants to turn higher, which means the turn higher here is the S fund in the numerator and the C fund in the denominator. So the S fund is looking like it wants to start outperforming the C fund. So there's the relative outperformance and there's the actual breakout through the upper channel line. Okay. I fund, not so much. We've still in this sideways consolidation pattern. We had a lot of negative volume in September on the I fund, and clearly the I fund versus the C fund is still down. So while the S fund is breaking out on its own and breaking out relative to the C fund, the I fund is not given the same indications, at least not yet. F fund, we put it up here just because it's part of the core.
We gotta. 5
funds, yeah, kind of gotta, but there's no, if anybody doesn't get it at this point that interest rates are going higher, and when interest rates go higher, the F fund goes lower. It's the way it is, and interest rates are going higher, and the F fund is going to continue to go lower.
No reason to be there.
No reason to be there, and obviously the relative strength of the F fund to the C fund is declines and declining. Okay.
Questions. If you have questions, send them to us wherever you can find this video. Comments on Facebook. You can send us an email to support@growmytsp.com.
Yep.
All kinds of ways. Hit us up on Facebook in the group. One key takeaway, if you're a member, make sure you check out the weekly update, the newsletter, because that's going to have all the closing after Friday, because there's going to be some things happening in the next few days. Yep. We've got our eyes on it. And just had to record the show earlier, but Jerry's still going to do his analysis at the end of the week. That doesn't ever change.
Nope.
He'll always have that. But those of you that watch the kind of public version of this, we don't always get to do that. So anyway, if you liked the show, please share it with your friends. If you didn't like it, tell us why.
Absolutely.
And again, if you haven't noticed, we have an app out there. If you guys remember, it's really, really useful. Take a look at it. Also, if you haven't downloaded our ebook and you're trying to figure out how to invest in the Thrift Savings Plan, we take you down that road.
Yep.
So you can check that out on our website. Anything I missed, Jerry?
Nope. I think it was a good show.
I think it was. Hope you guys had a great weekend. And, of course, the week coming up after you watch this show will be Veterans Day week.
Yep.
So, always got to remember that.
Yes, sir.
As us being veterans, we're very proud of that. All right, guys, take care. Have a good rest of the week. All right, we are out of here. Let me figure out which button to push.
We don't have a crystal ball.
There it is.
There you go.